my studio, I'm told my audio is low. My audio is low. How about now? Are you guys able to hear Mwalimu much better? How about now? Are you able to hear Mwalimu much better? Are you able to hear Mwalimu much better? Great, thank you very much. So then now we are comfortable. Now we start looking at this cash flow question, which is a must-come question. So and I'm looking at August 2023. It's normally a morning paper. All right. Question number 4. Question number 4. Question number 4, which is really a very, very interesting paper, which is really a very, very interesting paper, which is a very interesting paper. Question number 4, yes. This one of Lilongwe Limited. Lilongwe Limited. So we shall always start by reading the requirement. Always start by reading the requirement here. So the requirement, they want us to give them the cash flow statement for Lilongwe Limited for the year ended 31st March 2023, in line with the international accounting standards, cash flow statements, and they're giving us how many marks? 14 marks. So 14 marks for FR, I need 7 marks, 7 ticks. If I get 7 ticks, each tick will be 2 marks. Any 7 ticks, I have all the 14 marks. For the BDS students, you are not very, very lucky, because for you, 1 tick is 1 mark. BDS students, in this case here, you must have 14 ticks. So when they talk about cash flow statements, the very first thing you should do before you start talking about the dialing thing, please give us the cash and the cash equivalents, which will be reconciled. Give us the cash and the cash equivalents, cash and cash equivalents, cash and cash equivalents to be reconciled, because a cash flow statement basically reconciles what and what? It reconciles this cash at the beginning and the cash at the end. Cash at the beginning and the cash at the end. Is there somebody in this case here who is able to tell us the sitting? You have this question, remember, you have this question, you have this link to the past papers in your WhatsApp group. You have that link. But somebody can reshare it here. Somebody can help Mwalimu here. It is August 2023, FRA, question number 4, FRA, Lilongwe Limited. So there are some 2 free marks here. Give us the cash and the cash equivalents. So remember, when we talk of cash, we are looking at the cash at hand. All right. We are looking at cash in this case here at the bank, cash at the bank. If there is any cash in transit, it has to be included. If there is any cash in transit, it must be included here. Yeah. So for example, in this case here, cash that is on the way, maybe some customer has sent some money, but you're yet to receive. All right. So it will be put here. The moment you see it in a note, it will be put here. And then, of course, we have cash equivalents. So cash equivalents are like the treasury bills. So when we talk of cash equivalents, we are looking at the short-term investments. So it will be very, very important for us to recognize this, that here we'll be able to get some 2 marks for free. So then what do we have, ladies and gentlemen, here? So it is August 2023 FRA question number 4B. Thank you very much here. Question number 4B, yes. So then in this particular question, what do we have? In this particular question? We are given 2 years. We have 2023 and 2022. So we have 2023 and then we have 2022. So we have here 2023. This is the closing year, isn't it? And then the last year will be my opening year. All right. So we are given the 2. Ladies and gentlemen, if you look at this question, then you will be able to see what Mwalimu is talking about. Go to your statement of financial position. So in your statement of financial position, what do you have, my friends? In your statement of financial position, you can see where we have our current assets. So our current assets, you can see we have a bank. Are you able to see the bank? Yeah, we have bank, and then we have these short-term deposits, right? So we have this bank will be your immediate cash, and the short-term deposits will be your what here will be your cash equivalent, your cash equivalent. And then don't forget, ladies and gentlemen, that it is 2022 and 2023. All right. So please come and copy these figures the way they are. So we have the bank, and then we have short-term deposits, short-term deposits, short-term deposits, short-term deposits. All right. So then what do we have here? In 2023, you can see 2023. So the bank, how much do we have for the bank? Oh, yeah. I can see in this case, is it 15? 15, and then we have 32. So here we have 15 versus 32, 15 versus 32. And then you go straight away, my friends, you go straight away, in this case here to 2022. So 2022, I can see 75 and 120, 75 and 120. So in this case here, you can see for 2022, the bank is 75, and then we have here 100 and what here? We have 120. So up to there, first of all, are we in agreement? Up to here, are we in agreement, ladies and gentlemen? Up to here, are we in agreement? Up to here, are we in agreement? Up to here, are we in agreement? Yeah, the year is here, August 2023, FRA question, question number 4B, quite a great question. Question number 4B, quite a great question. Now, ladies and gentlemen, one other thing that you must be able to recognize, if you have any overdrafts, overdrafts is as good as a paid up liability. Because remember, overdrafts, the banks can always ask you to liquidate. The banks can always come for their overdrafts anytime. So then this one, you should be able to deduct out of this. So whenever you see overdrafts anywhere, please come and capture them here. So we have here overdrafts. Like in this case, you go to your current liabilities. So your current liability, are you able to see your overdrafts here? In your current liability, are you able to see any bank overdrafts? Please look at the current liability. Look at the current liability. I can see the bank overdraft here. Bank overdraft. So I can see 125 versus what here? 0. So I can see 125 for 2023 versus 0. 125 versus 0. So then remember that the bank overdraft is supposed to be done what here to be deducted. Bank overdraft is supposed to be deducted like this. Bank overdraft is supposed to be deducted. So then give us the cash and cash equivalents here, nothing more. Give us the cash and the cash equivalents. Give us cash and the cash who equivalents. So this will be the beginning, this will be the closing. So for 2023, is there somebody who can tell me for 2023, what do we have, ladies and gentlemen, for 2023? Thank you very much, Vincent, for sharing this. So for 2023, what do we have here? For 2023, what do we have, ladies and gentlemen? For 2023, what do we have here? How I wish they could give me these figures very fast. How I wish they would give me these figures here very fast, because we have to finish this thing today. Today we must finish it. We must finish this today. So Melly gives me 78 here. So I can see this is bigger Melly, so it must be negative, right? So it must be negative. It must be negative. Negative 78, right? Negative 78, yes. How about 2022? So we are taking, in this case here, the bank and the short-term deposits. How much do we have here? How much do we have here? All right. Thank you, Nancy. Thank you, Sammy K. Thank you so much. All right. So then this one here gives me 195. 195. So then we know that in between here is where we have the net cash flow. In between here. So we shall take, in this case here, the opening cash flow, 195. Then we add, in this case here, any net cash flows. Net cash flows, I should be able to get this closing if my statement will balance. So if my statement will balance, I will take, in this case here, the opening because of 2022. Opening, which is 195, plus any net cash flow that I'll be getting out of my 3 activities, then I should be able to get this minus what here? I should be able to get this minus 78. Now, the moment I do that, already, this is 2 marks. If you're doing FRA, Not 2 marks, but 2 ticks. If you're doing FRA, this automatically will give you how many marks? 4. 4 marks. Of course, if you're doing a PDA, those are just but 2. Those are just but 2 marks. For FRA students, ladies and gentlemen, every tick represents how many marks? 2 marks. Now from there, now we look for this cash flow. Now we are doing the cash flow statement. Now we are doing the cash flow statement. Now we are doing the cash flow statement. So then we are doing the cash flow statement. So we have here, it is Lilongwe. You can write like that. It is Lilongwe Limited, cash flow statement, cash flow statement, cash flow statement for the period ending, is it 30th or December? Let me just check. The period you must write, the period ending. So in this case here, the period should be, which period here? You just look at the dated statements. So period ending, 31st March 2023. So 31st March 2023. And then of course, you know, as much as I know that always, whenever we talk about a cash flow statement, to be able to get the net cash flow, we normally look at 3 activities. The very first activity will be operating activities. So we have here what we call operating activities. Operating activities, you must allow me to rub just this immediately here. So we start, there are 3 activities, don't forget. There are 3 activities. So we shall start with operating activities. So under operating activities, we normally pick the profit or the loss before tax. Profit or loss, and if it is loss, you must capture it in brackets. You take the profit stroke loss before tax. The profit stroke loss before tax. So do we have this figure somewhere? Just go to the paper itself. Do we have, look at the extracted income statement provided? The extracted income statement provided, it's here in note number 4. Note number 4, you can write there in brackets, note number 4, where they have given us the P&L extract for the year ended 31st March 2023. And then most importantly, you can see we have operating loss, interest receivable, finance cost. Then we have here loss before tax of 44. So the loss before tax there is 44. The loss before tax there is 44. So I'm capturing this. If I'm a BDA student, I'll write this in Excel and the capture it as minus 44. Minus 44. Can I kindly get some feedback from you, great students of mine? Are you able to follow somehow? Are you able to follow somehow what I'm doing here? Are you able to follow somehow what Mwalimu is doing? Are you able to follow somehow what Mwalimu is doing? Thank you so much. Now, once you've been able to write like this, then you go to the adjustments. So you mention here adjusted for. And once you mention adjusted for, then always remember our acronym. Remember our acronym. Our acronym will be dial God's number for food. For food, or you rest in peace, or you rest in peace, or you rest in peace totally, indefinitely. Indefinitely. If I were you, I would write that statement somewhere. This is very, very important. Dial, 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 dial God's number. Dial God's number for food, or you rest in peace totally, indefinitely, totally, indefinitely, totally, indefinitely. Dial God's number for food, or you rest in peace totally, indefinitely. So remember, the first one here is depreciation. The second one here is impairment of goodwill. Impairment of goodwill. Impairment of goodwill. Then we have here amortization. We have here amortization of intangible assets. Amortization of intangible assets. Amortization of intangible assets. We have here loss on disposal. Loss on disposal of assets. Of assets or subsidiaries or associates. Just any asset to dispose. Then we have gain on disposal, gain on disposal of assets, This will be your finance cost. This will be your finance cost. This will be your finance cost. Then we have this or, you will come and mention WO. So this is working capital changes. Working capital changes. I have to breathe a little bit simply because I would want to allow my BDS students to be able to type. You know, they're typing. I would want them to be able to type up to here. And once the BDS students are able to type up to here, are you able to put your thumbs up? Are you able to put your thumbs up? Once you type up to here, kindly put your thumbs up. It will be great seeing that you guys are able. And then I have a present for these students. Any BDS student will be able to have the very best presentation. Later on, they'll be presenting their work here with us. They'll be able to share their screens with us. So if you have the very best formatted cash flow statement, you'll be able to get Kenya shillings, 500 shillings from me. The very best formatted cash flow statement, you'll be able to get Kenya shillings, 500 live from me. So then as I wait for you guys to put your thumbs up, it'll be very, very important for me to remind you that this class, of course, it's being aired on YouTube Live. So that YouTube ninjas, please, you need to like, first of all, this video. And then in this case here, ensure that you are subscribing. You must subscribe. You must subscribe. You must subscribe. It's very important. Why should you subscribe? So that next time when I'm live like this, you'll get a notification. Whenever I post anything like this, you'll be able to get a notification. So I can only see Vincent, and I believe this is teacher Vincent, saying like this. So that is an outlier. Because you are a teacher, that's an outlier. I would want in this case here, some student, who is able to do this thing normally. Oh, this Vincent is also a student. Oh, okay, not teacher Vincent. Okay. We have a BDA teacher called Vincent. Just in this case here, to clear any doubts, I would want to get another student who has been able to type up to here, BDA student, putting their thumbs up like this. Oh, great. Now I can see great. Thank you so much. Then the working capital, there are only three. So we have these are receivables. We have inventory. We have payables. And then now lastly here, these are not working capital changes. Lastly, we have out of our cash flow from operations, we must pay tax. So tax paid. And then we have in this case here, interest paid, like that. So tax paid and interest paid. Tax paid and interest paid. So then what I will do, I will basically come here and lift my board a little bit to just ensure that you guys are able to write up to where I have been able to write. And then once you finish, kindly, even if you're an IFRS student or a BDS student, give me a signal that, hey, we've been able to write up to where you are. Once you finish up to where Mwalimu is, please give me a signal. Give me a signal either by saying Y for yes. You can say Y for yes. All right. Thank you so much. Now, ladies and gentlemen, if I'm the one who is doing this particular paper, I will not even bother with what is here. You know, ladies and gentlemen, exam is all about technique. It doesn't matter. I've taught for more than 20 years. What I know, it's all about you getting the technique of solving questions and being able to do this question within the stipulated time. So like if I'm the one doing this, I will not even bother, because when I try bothering looking at what is here, it means I read the notes. So if I'm the one, I will first of all rush to where we have the receivables here. These working capital changes. Working capital changes are very easy to handle, because anytime we talk about working capital, I will be taking opening minus closing. So in this case here, I will start with the change in receivable. So in this case here, is there somebody who is able to see the opening receivable? Opening receivable is a 2022. Yeah, Caroline, if you don't mind, I would rather Caroline, please, you call this number, Caroline. Caroline, kindly call this number if you don't mind for payment. That is a blessing. 0719 525,000. Please call that number. Call that number. So I would want in this case here, we look at the opening receivables. Remember, we have 2 years. We have 2022 and 2023. We have 2022 and 2023. 2022 is the opening. So if I look at my statement given here, my friends, if I look at the balance sheet and the current assets, I can see in this case here, my receivables, opening is 372, closing is 808. So 372 minus 808. So is there somebody who can easily give me this value? Any good Samaritan who can give me this value, my friends? Do we have any good Samaritan who can give us this value, my friends? So in this case here, they are telling me it is 436 negative. So I shall write it like that. Under this 44, I write it like that without reasoning. So minus 436, minus 436. After that, ladies and gentlemen, let's target the inventory. Let's target the inventory. So inventory still is under current receivables, or rather current assets, I mean. So inventory, you can see inventory, the opening is for the 2022 and the closing is here, 2023. So I can see in this case here for inventory is supposed to be 420 minus 350. So this is of course 372 minus 808. And then we have here for inventory, it's 420 minus 350. 420 minus 350. 420 minus 350. So then are you guys able to give me this change? Is there somebody who is able to give me this change? They're giving me 70. They're giving me 70. That is what I will write. That's what I will write. From there, we go to the payables. Payables, you must be very, 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 very keen. Students, I repeat, that payables, you must be very keen or else you get a 0. You see, payables is a liability. So for payables, after you get the change, O minus C, because it's a liability, we must always change the sign. We must always change the sign. And how do we change the sign? We shall take opening minus closing. Whatever answer we get, we multiply to the -1. We can either multiply to the -1 or we simply change it. Changing means what here, that if it's positive, we write it as what here, negative. So then for payables, is there somebody who is able to see the 2022 payable? Is there somebody who is able to see the 2022, the opening payable? Is there somebody who is able to see the opening payable? Please talk to me. Opening payable, the opening payable. Is there anybody who is able to see the opening? Under liabilities, current liabilities, I should be able to see here. You can see in this case here, the payable is 515. So I'll take 515 minus 530. So ostensibly, I'm getting minus 15. Because 515 minus 530, I'm getting minus 15. But there is this rule which tells me that, hey, for liabilities, you must always change the sign. So for liabilities, so for payables, I will talk of 515 minus 530, whatever I get, I say times 1, -1, I mean, I'm getting there 15. I'm getting there 15. Now, ladies and gentlemen, the moment I do this, you see at the end of the day, I will be able to get 1, 2, 3, 4. If I'm an FRA student, those are 8 marks. I'm telling you, failing in FRA, honestly speaking, means that you never attended anybody's class. Otherwise, if you attended some of these ninjas classes here, FRA is normally the simplest paper. It's normally the simplest paper because even after I reach here, I will not still go here. No, I'll strive in this case here to get all my marks. I'll be able to go to the tax that was paid. So the tax paid, allow me to do the tax paid. Tax paid is not that easy. Tax paid is not that easy, but we shall be able to tackle it. Tax paid is not that easy, but we shall be able to tackle it very well. So tax paid, we shall come here and look at the tax payable account. Tax payable account. So for the FRA student, of course, they will do a T account. BDA student, I don't like students doing T accounts, kwa BDA, no. So remember, tax payable, we combine current tax and a deferred tax. We combine like that. Current tax and a deferred tax. So you'll be able to come and give us the current tax brought down. Current tax brought down. We have deferred tax brought down. All right. Is there somebody who is able to see? And then we have here current tax carried down. Then we have deferred tax carried down. Remember, it's a liability account. Liability you bring down on the credit. You bring down on the CT stands for current tax. DT is the deferred tax. Deferred tax. So, ladies and gentlemen, then in this case here, what are we going to do here? What we shall be doing, my good students, it's about tracking down the tax expenses. So come to the current liabilities. I'm able to see, ladies and gentlemen, taxation here. Remember, this is the current tax. So current tax in this case, I'm able to see it's 110, 110 and 15. So current tax in this case here brought down is 110. Current tax carried down is 15. So we are looking at 110 vis-a-vis what year? Vis-a-vis this 15. Do we have any deferred tax liability? Do we have any deferred tax? Yes. If you look at non-current liabilities, we have deferred tax here. Then we have 75 versus 90. So here deferred tax brought down is 75. Deferred tax carried down is 90. Deferred tax carried down is 90. Deferred tax carried down is 90. So first of all, please ensure that if you're doing your T account like that, please capture it like that. Capture it like that. If you're doing a deferred T account, or rather your tax payable account, capture it like that, and then we talk business. Then we talk business. We talk business. So in this case, I've been able to touch the two ends of my stick in terms of opening balances, closing balances. But you see now there is a stick itself that I must touch, the in-between. So the in-between, I would want to know the profit and loss. The profit and loss in the year. Do we have any profit and loss taxes? Do we have any profit? Adjust the board. Yes. Oh, sorry for that. We shall overcome. We shall overcome. We shall overcome. We shall overcome. So please let me know once you're able, first of all, to write up to there after I've adjusted the board. So of course, for the BDS students, you're doing one on one cell. They brought down, so you're adding them. So we're saying equals 110, 75. The carried downs, in this case, you subtract. You can say minus 15, minus 90. All right? And then the P and the L you add. So remember, for us in BDA, brought downs are positives, carried downs are negatives. Carried downs are negative. And then, of course, you add the P and L. The P and L increases. P and L is increasing. So the P and L, please go to the P and L. Go to the P and L in the period. The P and L, what do we have here in the P and L? In the P and L. Go to the P and L, ladies and gentlemen, the extracted P and L. Do we have anything nice here? Oh, yes. You can see here in the P and L, you can see there is an income tax repayment claim of 14. Income tax repayment claim of 14. So here we are claiming, and there is a deferred tax charge of 15. So there are two ways. So this claim is a tax income. It's a tax income. Remember, when the tax liability was increasing, we were crediting. Whenever the tax liability increases, we credit. But now we have a tax income which is supposed to reduce this. So we have in this case here the tax claim. Tax claim. So this tax claim, ladies and gentlemen, is basically an income to us. So this tax claim is 14. So this is from the P and L, the P and L. And then, ladies and gentlemen, we have P and L. We can see on the same year there is a deferred tax expenditure, which is increasing this tax obligation, So we have a deferred tax of how much here? Of 15, a deferred tax of 15. So deferred tax is a liability increasing, this 15 increasing. So if I'm doing this using, in this case here, Excel, I will say equals 110 plus 75, minus this, minus, of course, this. And then we will be able to add that 15 for you to be able to get the tax that was paid in the year. For us to be able to get the tax paid in the year, is there somebody who is using this T account? Are you able in this case here to give me the bigger figure? Which figure is bigger? Which figure is bigger? Is it this or the other one? Debit figure. Which figure is bigger? Which figure is bigger? Which figure is bigger? Because my interest is to know the tax that was paid. So why have you debited this? Remember, this tax claim is an income to us. How do we handle incomes amidst obligations? They should be debited. They should be debited. They should be debited. So I'm told the credit is bigger. So how much? How much do we have here? Somebody, this is 90. Is it 200? I'm not so sure. Is it 200? Is it 200? Is it 200? Is it 200? Thank you so much. I can see it is 200. So then say 200 minus 90 minus 15 minus 14, give me a figure. 200 minus 90 minus 15 minus 14, please give me a figure. How much do we have there? So this is the tax paid. Tax paid, so bank, tax paid, 81. Tax paid, 81. Tax paid in the year is 81. Tax paid in the year is 81. Tax paid in the year is 81. So we debit this, we credit bank account. So tax paid is 81. Tax paid is 81. So for us to be able to know the interest that was paid, we need to know the finance cost. We need to know, so this is supposed to be in brackets, by the way, because it's a cash outflow. It's a cash outflow. It's a cash outflow. These two will always be in brackets. These two will always be in brackets. So now we are chasing for the interest paid, the interest paid, the interest paid. So if you allow me, I will be able to delete this. I will be able to delete this. This normally is among those accounts which disturb students. But the moment you've been in this kind of classes, then you will be able to overcome. So we go straight away to tax interest. You see, interest and finance cost have a relationship. Like in this question, go to the P&L. This finance cost, you shall always read it as it is given in the P&L. You shall always read it as it is given in the P&L, and you'll be able to get a free mark. So finance cost, how much is the finance cost? Is there anybody who is able to see our finance cost in this question? Anybody who is able to see our finance cost in this question? From the P&L, you can see finance cost here. Finance cost is somewhere here. How much do we have there? 24. Finance cost is 24. Don't take it as a negative. No. This finance cost is supposed to be written here as positive here, you know. It's supposed to be written as positive here. Why? Because whenever we are doing adjustments to our operating profit, ladies and gentlemen, here, all costs shall be added back. All costs shall be added back. Incomes shall be subtracted. Why are we adding costs back? Remember, this person did a mistake and he deducted this 24 and he ought not to have done that. So then how do we correct? To correct in this case here, we add back. To correct, we add back. So finance cost 24, we are adding back. But now when it comes in this case here as now getting the exact interest that we paid, you see this is the interest for the year. This is the P&L, the P&L. So I'll need to come up with a interest payable account. Interest payable account. So this interest payable account, I will, because it's a liability. So I will say in this case here brought down, the interest brought down. Go to your current liabilities and see whether we have an account called interest. An account called interest. So an account called interest, go to your balance sheet and the current liabilities, no interest here. No interest totally. No interest totally. So then this is really, really good for me because there is no interest, meaning that brought down is zero, meaning that brought down is zero and the carried down is zero. Brought down is zero and the carried down is zero. The only thing we need to do is to go and read some note there. There is a note that we must read. There is a note that we must read. There is a note that we must read. A very important note. What is this note telling us, ladies and gentlemen? What is this note telling us, ladies and gentlemen? So this note, if you look at note number 2, note 2, note 3, yeah, note that one, note 4. Look at, in this case here, note 5, short-term deposits are deemed to be cash equivalents, very good, dividends. No, there is a particular note. There is a particular note. There is a very, very important note here. Let's just read from note 2. The company revalued the carrying value of land and buildings by an increase of 70 million on 1st April 2022. On 31st March 2023, it transferred shillings 3 million from revaluation reserves, retained earnings relating to depreciation. That cannot affect me. Even note number 2, where is this note? I can see somebody saying, you guys, you are able to see this very well. There is a note talking about, somebody is telling me note 4. 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 Note 4. There is a note. There is a note. Note 4. Down here, yes. You can see down here. Finance cost, which is 24. We have interest expenses themselves are 18. And then we have penalty for early loan redemption of 6. We are being told, ladies and gentlemen, that in this finance cost, we have interest of 18 and a penalty of 6. So brought down interest payable is 0. Carried down in this case here is 0. All right. In the P&L, in terms of interest payable, I can't bring in the P&L, I can't bring this penalty because I'm only looking at the interest payable. So the interest payable is 18. So then if I balance, this will be 18, this will be 18. It means that the interest paid is 18 exactly. So this is what I debit here with and credit my bank account. So then interest paid, ladies and gentlemen, is 18 here. Put this in brackets and please confirm that somebody has been able to write up to here. Please confirm whether you've been able to write up to here. Once you write up to here, kindly shout or ask questions. Feel free to ask questions as well. Feel free to ask questions as well. Feel free to ask questions. But if you have been able to write up to here, you can see I'm holding the whiteboard for you, which is really making me to be quite muscular, which is very good. Yeah. So once you write up to here, kindly give me a signal there that, hey, I've been able to write. Great. Thank you so much. So you can see now this section is over. I'm so happy. This section is over. If I'm a CPA student doing FRA, I'll now come and just pick a few here, just a few. And then I have all the marks. I don't even have to go to the other sections. Although in class we have to finish, but just a few here, I'm done. Just a few here, I'm done. So now let's read. Yeah, Natalie, I'll be able to address that. That's an investment income. I'm able to address that. I'll be able to address that. Now, so let's now read the notes slowly. Let's read the notes slowly. We start with note number 1. Let's start with note number 1. So note number 1, details of property, plant, and equipment as at they're giving us. So here, what I'm interested in is the current year's depreciation. So the current year's depreciation, I can see 2023, it is 12 and 148 for plant, 12 for land and 148 for plant. So then I'll be able to consolidate this. This is the depreciation I add back. So depreciation, in this case, it will be 12 plus 148. So depreciation here, it will be 12 plus 148, the most current, which will end up giving me what figure? 12 plus 148 gives me what figure? 12 plus 148, first of all, gives me what figure? 12 plus 148 gives me what figure? Wait, now they're not talking to me. 160. So this is what I would write here. So remember that this depreciation has to be the current year. Now, remember you guys, we are not doing in this case here any group cash flow statement. So in most of your questions, impairment of goodwill will not be there totally. Especially FRA, I can guarantee you. BDA, we could have this. All right. Impairment of goodwill. Goodwill is a terminology used in group accounts. And in this case here for FRA, we don't have any group accounts. Now let's go to intangible assets and see whether there is any amortization. Intangible assets. Are you able to see your intangible assets in the statement of financial position? Is there somebody who is able to see intangible assets there? Intangible assets. Is there anybody who is able to see intangible assets? Intangible assets. Intangible assets. Intangible assets. So intangible assets, yes, I can see them. They are here. Intangible assets are here. Intangible assets are here. You can see at the beginning we had 510. And then here we have 400. In the additional notes, there is no mention of intangible assets like we acquired or even we disposed. No mention of intangible assets at all. So in this case here, then that loss, that reduction from 510 to 400, it must be a loss in value. Loss in value of intangible assets is what we call amortization. Amortization. So in this case here, under amortization, you can see we began 2022, our intangible assets were worth 510, and now they are worth 400. So 510 minus 400 gives me what, this will be positive. Positive. So this will be positive 110 because it's a cost. Costs are being added. Costs are being added. So for your revision, you would have written there equals 510 minus 400. All right. If they told us we dispose, then I would have done a T account. But I don't have to do any T account here. I don't have to do any T account. I like handling these two together. All right, because they really match. Now from there, ladies and gentlemen, then I will be able to continue reading my notes. And I'm almost clearing this. I'm almost finishing this. So we come straight away to note number 2. Note number 2. The company revalued the carrying value of land and buildings by an increase of 70 million on 1st April 2022. On 31st March 2023, it transferred shillings 3 million from revaluation reserves to retained earnings relating to depreciation on revaluation of buildings. I'll be able to use this note when I'm calculating my dividends. Because dividends, we normally use retained earnings to calculate dividends. Look at note 3. During the year, the company acquired a new plant. The company acquired what year? A new plant. At what cost? At a cost of 60 million. And they sold some old plant for how much year? Shillings 15 million. Incurring a loss on disposal of 12. Free mark there. We have a loss on disposal of 12. We have a loss on disposal of 12. So we have a loss on disposal of an asset there of 12. Of course, for FRA, it's quite easy. If we have loss on disposal, then automatically we shall not have gain on disposal of assets. Two sides of the coin. So one side will prevail. For FRA, FRA, if it's advanced FRA, you will have an asset, a PPE asset which was sold, and you'll have in this case here, for example, a subsidiary which was sold. So you can have both of them. But in your case, whenever you see, ladies and gentlemen, in this case here, whenever you see, ladies and gentlemen, where they're giving us this loss, then this gain is not there. The gain will not be there. So for the plant information on revaluation, I'll be capturing that information when I'll be looking at my investing activities. So have we been able to, we have seen depreciation, we've seen impairment, we've seen amortization, we have loss on disposal of assets, we have gain on disposal of assets, we have finance cost. Now the only thing that we now need to do just to be very, very safe, go through this operating, where you have your operating profit, where you have in this case here your PBT, Ask yourself, in this case here we have a PBT, actually it's a loss. It's a minus 44 loss. It's a loss, minus 44 profit. So ask yourself, in this particular case, when we move up here, do we have, for example, like investment incomes? Do we have any investment incomes included in these profits here? Do we have them? If we have them, then we are going to remove them. And when I talk of investment incomes, we are looking at what kind of things here. For example, you could be told that there is a subsidiary that we have invested in, and this subsidiary has paid us dividends. When you see dividends here, then you will have to come and subtract. For example, you have got rental properties, and now you've invested in rental, you are getting rental income. If they book it, you must remove it. So then you have to be very, very keen here. When you have this PBT, please look north. Look north. Try to single out any investment incomes that you need to come and deduct out of this. Any investment incomes you need to come and deduct out of this. Do we have them? Let's see. Let's see whether we have any investment incomes. Let's see any investment incomes. So we are looking at this extracted P&L, extracted P&L. So you can see this loss before tax, this 24, this 44. So we ask ourselves up here, do we have any investment income? Yes. So you can see we have a fixed loan, fixed deposit account. We have opened, in this case here, some fixed deposit account, and therefore we are getting, in this case here, some interest. We are getting some interest. And you can see we have booked in this. We have interest what year? Interest receivable. We have interest receivable. We have interest receivable, interest receivable. So this is an investment income. It's non-operational, so we need to deduct it. So investment income, so you come and squeeze it anywhere. You come and squeeze it anywhere. The BDA students, I believe you can create an extra row. BDA students, I know you can create an extra row anywhere here. Anywhere here. And then you come and subtract, in this case here, interest, the way it is. Interest receivable. Interest receivable. We are subtracting because you see they had added to get this, that included it here. So after you have finished this thing of dial God's number for food, or you rest in peace totally, you must always come and ask yourself, before this line of PBT up there looking north, do we have any investment incomes? If they are there, they must have been booked here. And therefore they must be done what here? They must be deducted. They must be deducted. They must be deducted. Ladies and gentlemen, after you do that, don't give me any additions. Don't give me any additions. Don't give me any additions. First of all, go straight away to the other section of our cash flow statement. Now we are looking at investing activities. Investing activity. There are not many, there are very few investing activities. And unfortunately, yeah, investment activity is not supposed to be part of operating. Is not supposed to be part of operating. It's supposed to be part of what here? Any investment income. It should be part of these investing activities. Part of this, and you're going to see what we shall be doing here. You shall be able to see what we shall be doing there. So please go back to, I can see in this case here, yeah, you see, Ruben, very good question. Is there a good reason in this case here of just showing them when we don't have them? For me, I would tell you, yes. Just show them, but of course, be putting what here like a dash. For me, I'm normally used with a standard format of doing this. Yeah, just put it there, and then we'll be showing what here, dash there. We'll be showing dash there. I hope you're in agreement. I hope you're in agreement. I hope you're in agreement. So, ladies and gentlemen, let's then now move slowly. Let's move slowly and try to see a few things here under investing activities. Remember, when we talk of investing activities in our balance sheet, what are we looking at? We are looking at the non-current assets. If, for example, we have bought a property, plant, and equipment, if, for example, we have bought some subsidiary shares, if we have bought any intangible asset, and of course the same if we have sold any of the three. Because selling them means what here? Divesting. So anytime they talk about investing activities, we shall always monitor what is happening with our non-current assets. And if I go to the notes, the accounts, these non-current assets are given there. They're given there. They're given there. If I come, ladies and gentlemen, here, I'll be able to see so much in terms of what here? In terms of like the non-current assets. Yeah, the non-current assets. You'll be able to see something about the non-current assets, quite a lot. So look at, for example, note number what here? Note number 3. So note number 3, during the year, the company acquired a new plant at what cost? 60 million. I've invested. So I need to capture that. So in this case, we have there, new plant acquired 60. So we write there, new plant acquired 60. New plant acquired at 60. So this is supposed to be a cash outflow because the plant has come on board. And then of course we have in this case here money flying away. It's a cash outflow. So new plant acquired, free mark. Free mark. I can see in this case here questions here. Please feel free to ask as many questions as possible. No, Natalie, you are not right. You see what I'm doing here? I'm not including investment activities. It is the accountant who had made a mistake. It is the accountant, when he was doing his P&L, it is the accountant who had made a mistake to include an investing activity here. What I've done is to remove it. So now I can take this figure to the proper place. That's why you can see in this case here, this investment activity. I'm subtracting it, Natalie. I don't know whether we are together really here. I'm not including it. If I was to include, then I would be adding, right? You see, I've gone up there to the profit before tax, and I've been able to see, hey, there is a problem here. Now I'm adjusting. I'm adjusting. I'm adjusting. I'm adjusting. I don't know what is your interpretation on this. It's a problem that I'm resolving here because the accountant, when he was doing his profit here, he included some investment income. So I need to remove it from here. I take it to its rightful place. I take it to its rightful place. Actually, in that regard, I would even want us to look at that interest receivable. Let's look at the interest receivable account. Interest receivable account. So this interest receivable account, remember this, I will come and talk of balance brought down. It's an asset, remember. All right. So interest receivable account, do we have an account called interest receivable? Do we have an account called interest receivable? Oh, yes, we do. Oh, yes, we do. Before I continue, because I can see this is really confusing you. I can see this is really confusing you. Let's first of all handle this. We put it out of our way. We put it out of our way. Yeah. If you look at your current assets, you'll be able to see interest receivable. And the opening balance for interest receivable is 3. Is 3. And then we have in this case here balance carried down. Balance carried down, there you can see is 5. Balance carried down is 5. And then what is in the P&L? What is in the P&L? So P&L will be decreasing this. So the profit and loss, in this case here, how much do we have here? You guys told me interest receivable is 12. So if you add here, this will be 15, this will be 15, and therefore, this will be 15. I think I've written 2 down. Therefore, we have in this case, ladies and gentlemen, bank, what I received as interest is 10. So interest, not receivable, but interest received. Interest received is 10 positive. So I've been able to remove this from operating activities. I'm putting it in its rightful place. I'm putting it in its rightful place. So, Naitale, are we together now? Are we together now? Are we together now? That I was not really putting it here. I was simply transferring it. Are we together now? Not Naitale alone, all of us. Are we together that that is the proper way of handling it? Somehow, please give me a response there. Are we together? Are we together somehow? Wait, they are not talking to me. They are not talking to me. International disaster. Well understood. Great. Thank you very much. Thank you very much. So let's continue reading. Actually, it's good we have been able to let this out of the way. Remember, interest received, it should be positive in our cash flow statement. This should be positive in our cash flow statement. This should be positive in our cash flow statement. Let's now continue reading those other notes. And please feel free to ask questions. Ask them. Ask many of them. So I was reading this note number 2. That the company, no, not number 3. During the year, the company acquired a new plant at a cost of how much? At a cost of 60 million. And they sold some old plant for 15 million. You can see we made a divestment. We made a divestment. We sold a plant for 15 million. We received cash there. In carrying a loss of 12, I'm not interested in that loss. I'm interested in the money received. So we disposed a plant item. We disposed. So plant disposed. So we have here plant disposed. We received 15. 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 These are free mark. Free mark as well. Nothing here really, free mark. Now, ladies and gentlemen, we may need to do two key accounts. We may need to do two key accounts. One of those accounts I would want us to do is the land and buildings, to know whether we bought some land and buildings. So land and buildings. So I want to give out that 500 shillings, and I would want at this juncture before I continue, and I will give 500 to an FRA student. I'll also give 500 to a BDS student. So the BDS students, I would want you to feel free to share your screens. Want to see who has really done a very, very good job up to now. We give them a present. Who has done a very, very good job up to now, we give them a present. So in this case here, I would want them to share their screens. Let me just come here and allow them to share. I'll have to allow them to share. Are you able to share from your side? How comes I can't see that? Why is it disappearing? There is a place where I should be able to allow you to share your work. It's not nowhere. There's a place where I'm supposed to allow you guys share your work, but today, or not see, it's here. Yeah. So BDS students, I'm giving you exactly 3 minutes. Try to showcase your work. Try to showcase your work. BDS students, try to show us your work. Let's see what you have done, BDS students. Any student who has been able to reach where we have reached, and then you show us what you have written. All right. So I can see great work here. Then I can see Anthony. Let me see Anthony, what Anthony has done. All right. Great stuff there. All right. Great stuff there. Great. Great. So apart from Anthony, do we have any other ninja that has also been able to do something there? We give them a present. Apart from Anthony, do we have any other ninja who is in the contest here? So we have Sami. Let's see. So remember the students here, the students who are here will be the judges. The students who are here will be the judges. Whoever you shall choose to be the very best, then that student should be able to get 500. Yeah, so we have Sami. Already have seen Sami. So I like the fact that Sami has been able to give us a title, very well balanced. All right. All right. But I'm missing out on colors. But you have a very good presentation. A very good presentation. Thank you very much. Then we have in this case here, Anthony Murumba, I've already seen yours. What about the other BDS students? I can't see so many of them. I can't see so many of them. We have Milka. Milka, thank you very much for sharing. So Milka, Lilongwe Limited Statement of Cash Flows. I can see the date there. Very good. The only thing that I'm missing from you guys are the colors. I need very good formatted documents with bold, with bold, with bold, with bold. So then I would want to wait for the students in this case here to tell me like who is the very best. But before they do that, ladies and gentlemen, please then allow me to just continue here. Allow me to continue here. Allow me to continue here. And as I continue, oh, I can see another ninja sharing. No. This Sami, sorry. This Sami. Sami already had seen his work. So Sami, I'm the one now who is sharing. Great. So that's okay now. Great. Now, so I would want us to look at the land and buildings account. So land and buildings account, this is an asset. So balance breakdown is here. So we have here balance brought down. So land and buildings balance brought down. How much do we have for land and buildings? How much do we have for land and buildings? Balance brought down. Remember, we work with net book value. We work with net book value. Brought down is 2022. Carrying amount is the same as net book value. So it's 420. So here we have 420, 420 carrying amount. And then balance carried down for 2023, land and buildings. Land and buildings, we have 588. So we have 588. We have 588 for land. And what here? For land and buildings here. Ladies and gentlemen, from there, what else have they told us? What else have they told us? What else have they told us? The next thing they have told us, which will make my land and buildings go up, is in note number 2. The company revalued the carrying value of land and buildings by an increase of 70 on 1st April 2022. So there is a revaluation upwards of 70. Revaluation upwards of 70, we shall debit this account. We credit the provisions. So in this case here, we have here revaluation gain. Revaluation of 70. What will reduce this land and buildings? We have, if we sell any property, depreciation, like now here we have depreciation. Is there somebody who can see the current year's depreciation figure? The current year's depreciation figure, the current year's depreciation figure, this will for sure reduce our value. So the current year's depreciation figure, what do we have here for land and buildings? It is 12. For land and buildings, depreciation there is 12. So there is no any other entry if the account is not balancing, because we never disposed anything. If the account is not balancing, then this must be an acquisition. So I can see here we have 600. Is it 600? I'm not so sure. 12 plus 588. 12 plus 588. Yeah, it is 600. So then this side must be 600. 600. So then, ladies and gentlemen, you can see there is another increase, which is not as a result of revaluation. So it will be 600 minus 70 minus 420. So 600 minus 70 minus 420, this gives us what figure? This gives us what figure? It gives us 80. Gives us 80. Somebody's giving me a figure of what here? A figure of 80. Is it 80 or 110? Somebody, Kibisu, just check again. I think it's 110 because you see this 490. This 490. So 600 minus 490, this will give me 110. So of course this bank, it's affecting my cash flow. So we have here land and buildings acquired. Land and buildings acquired. Land and buildings acquired. So land and buildings acquired, land and buildings acquired, we have here 110. Land and buildings acquired, we have 110. And then remember now, this will be in brackets because we brought in a plant, we brought in, land, money went away, money went away. That's why we are debiting this account, crediting our bank, crediting our bank. So that is supposed to be in brackets. That's supposed to be in brackets. So you see, when we talk about investing activities, I'm tracking my PPE items. I'm tracking my PPE items, property, plant, and equipment, and any intangible. So we are tracking both tangible, long-term assets, and the intangible, long-term assets. So ladies and gentlemen, also this plant, there is something that I would want us to look at under this plant. But first of all, before I make the next move up to here, are we really okay up to here? Have we been able to capture this T account somewhere there, the FRA students? I know for you, you are capturing this using T accounts, but the Excel students, you must get your own way. Because you start with this positive, revaluation is increasing, depreciation is a negative, balance carried down is always a negative. The balance here, if you get in this case here, for example, a negative amount, that is a cash outflow you acquired. I'm so sure you must have done this in class. I'm so sure you must have done this in class. Yes, so we are together there. So then can you kindly go ahead and do this other working for me? This other working for plant. Please do this other working for me for plant. Do this other working for me for plant. Do this other working for me. So we have land, buildings, and plant. So plant is put separately. So we have plant. We have plant. So for this plant, what do we have here for the plant? I'm almost finishing this, ladies and gentlemen. So for the plant, if you look at the question provided, this is really straightforward. If you look at the question provided, this is really straightforward. So the plant, what have they told us about plant? What they've told us about plant is this. First of all, bring the balances down. Plant is here. Don't bring this cost. We always bring down the carrying amount. So the carrying amount to bring down here is 300 what here? Is it 340? Is this 340 for plant? Is there somebody who is able to see 340 for plant? For plant? Is there somebody who is able to see 340 for plant? I mean, these guys are not talking to me. These guys are not talking to me. So for plant, we have balance brought down. Balance brought down 340. Balance brought down 330. And then we have a balance carried down 292. Balance carried down. Balance carried down 292. First of all, we have to be comfortable here. 292. Balance carried down 292. Balance carried down 292. 292. All right. Great. And then, ladies and gentlemen, remember we acquired some plant. There's a place they told us we acquired a new plant. When you acquire a new plant, what happens? The plant account fattens. The plant account becomes big. So in this case here, new plant, 60. New plant, 60. And then, ladies and gentlemen, remember we also sold some plant. So when you sell some plant, in this case here, remember plant sold, you must credit this account with the net book value. With the net book value. You must credit this account with the net book value of the plant that was sold. Don't credit this account with the cash proceeds. No, I want the net book value. Net book value. So then how do we get this net book value, ladies and gentlemen? It's very easy. To get this net book value of the disposed plant, you must give us what we call a disposals account. You must give us a disposals account. So I would want somebody in this case here to come and give us a disposals account. So I want somebody to come and give us a disposals account. So I want somebody to come and give us a disposals account here. So please come here, give us a disposals account here. Disposals account, because we disposed a plant item. So this disposals account, what normally happens is that when you dispose, the plant goes, you receive cash. You receive cash. All right. So when you receive cash, what happens? You shall debit bank, you credit disposals account. Cash received. Cash received. From note number 3, how much do we receive from the plant that we disposed? We disposed this plant and we received 15. Do they still remember this 15 that we got when we disposed this plant? When we disposed this plant, are they able to remember that 15 really, these ninjas? When we disposed the plant, actually it is even here, we got 15. So we debited bank account, we credited disposals account. And then they have given us the loss on disposal. Whenever we get a loss on disposal, what do? You credit disposals account, you debit the P&L. So we have here loss on disposal. Loss on disposal. Loss on disposal. Is there somebody who is able to remind us what the loss on disposal was? Loss on disposal of the asset. Is there anybody who is able to remind us what the loss on disposal was? Somebody just remind me. What was the loss amount? 12. So you see, we only have 3 items under the disposals account. Under the disposals account, we only have 3 things. We have these 2. If it's a profit, of course, I would have debited this, credited the P&L. So then we have this 27, and then of course we have in this case here the net book value. So the net book value automatically will be 20 what here? Will be 27. The net book value will be 27. 27. So this plant sold here was worth 27. I don't think there is any other thing we have left out. Except depreciation. And this is the error that the examiner made. Can you kindly come and give me this depreciation amount. Please come and balance everything. So this should be 400. This should be 400. What is the depreciation amount here? This examiner never balanced this very well. What should be the depreciation amount here, somebody? What should be the depreciation amount here? So 340 plus 60 is 400. So this is 400 minus 292 minus this net book value of 27. So 400 minus 292 minus 27. This will give me what amount, somebody there? This will give me what amount, somebody here? So depreciation here ought to have been 81. Depreciation ought to have been 81. Not 148 that we booked here. So this examiner may not have taken into consideration, this particular what year depreciation of the asset that was disposed. So please do me a favor. I know depreciation for machinery is okay. For land and building, the 12 is okay. But now please here come and make a change. Right here plus 81, right there plus 81. So 12 plus 81, please correct this figure. Sometimes these examiners make mistakes. Please correct that figure. So what is 12 plus 81? Is there somebody who could be able to tell me this figure? What is 12 plus 81? What is 12 plus 81? I'll be able to explain and I'll be able to do these kind of questions severally. 12 plus 81. So this gives me what here? 12 plus 81. Now they're not talking to me. 12 plus 81. This gives me 93. This gives me 93. Thank you very much. This gives me 93. Thank you very much. 93. 93. 93. 93, 93, 93, 93, 93, 93. So then can you kindly do Mwalimu a favor? Are you able to come and add these operating activities? All of them. Operating activities, how much do we have? Pako kuchini kabisa. Add the operating activities. Somebody, I want to get in this case here the cash flow from operating activities. Add everything because I want to rub my board. Add everything, add everything, add everything. I don't think we have omitted anything. Add everything. So how do you add? You start with minus 44 plus 93 minus 12 plus 110 plus 12 plus 24 minus 436 plus 70 plus 15 minus 81 minus 18. Please give me the net. Please give me the net. Please give me the net. I'm really dependent on you guys. I'm really dependent on you guys. Please give me the net. This will really help you. This will really help you. So I want somebody to give me the cash flow from operating activities. Cash flow from operating activities. Most of them are getting 164 minus 267 junior boy, which is very good. Minus 267 junior boy, which is very good. Minus 267, which is very good. Minus 267, very good. So in this case here, cash flow from operating activities, we are getting minus 267. Cash flow from operating activities, we are getting minus 267. 267. How about cash flow from investing activities? How about cash flow from investing activities? Cash flow from investing activities, what do we have there? Cash flow from investing activities, there are only 4 items. There are only 4 items. There are only 4 items. So minus 60 plus 10 plus 15. Land and building acquired minus 110. Minus 110. You guys, please give me answers. I want to help you tonight. I want to help you tonight. So for investing activities, is there somebody who could be knowing how much are we talking about here? So it's minus 60 plus 10 plus 15 minus 110. What do we have there? Somebody is giving me minus 145. Please have those. So you can see in terms of performance, this company is horribly performing. You can see operating activities negative, investing activities negative. Let's look at the last bit, which is the one of what year? The one of financing activities. The one of financing activities. So remember what we said, that financing activities, we shall always look at equity. and the debt. We shall always look at equity and the debt. Financing activities shall always track down the share capital and the debt. So under financing activities, what do we have here under financing activities? Let's do an account called ordinary share capital account, and of course, premium. We combine the two. We normally combine the two. We combine the two. Let's do an account called ordinary share capital and a premium account. So we talk of balance brought down. So in this case here, we have ordinary share capital brought down. Then we have premium brought down. Premium brought down. So ordinary share capital brought down. Ordinary share capital brought down. Is there somebody who is able to see the ordinary share capital? Please go to your equity. Whenever we talk of financing activities, we are looking at equities. We are looking at equities. We are looking at equities and the debt. So you can see none here. Share capital. You can see we are 200 brought down. 200 brought down. So in this case here, ordinary share capital brought down is 200. Premium brought down is 0 for 2022. You can see premium brought down. Share premium brought down. Nothing really, nothing there. And then now we go to the carried down. So carried down, we have ordinary share capital carried down. We have premium carried down this side. Remember, equity is like a liability if you look at the accounting equation. So the ordinary share capital carried down, the ordinary share capital carried down, the ordinary share capital carried down, ordinary share capital carried down. Here, 300 versus the premium of 60. So we have 300 versus the premium of what here? The premium of 60 versus the premium of 60 versus the premium of 60 versus the premium of 60. So then, ladies and gentlemen, are you able straight away to tell me, what is happening here really? What's happening here really? Of course, here, straight away, I'm able to see that I issued more shares. I'm able to see that I issued more shares in the year. I issued more shares in the year. So if we balance here, 360, 360, 360, 360. So you can see here, new shares, bank. New shares, so bank. So 360 minus 200 gives me how much? 360 minus 200 gives me how much? This gives me 160. 160. So we have here new shares issued. These are financing activity. New shares issued. So new shares issued, 300 and what year? 360. New shares issued, 300 and, no, 160, sorry, where am I looking at? 160, thank you very much, 160. So remember here, this is really a straightforward thing. For new shares, you combine. Normally we combine ordinary share capital and premium account. That we shall always combine. That we shall always combine. Now I'm on my last thing. I'm on my very last thing, ladies and gentlemen. Remember, with these shares, there shall always be the thing of what here, dividends. So come and give us the dividends paid to our ordinary shareholders. Dividends paid. Dividends paid. So dividends paid to our ordinary shareholders. So dividends paid to our ordinary shareholders, this has been given. There is a note which has told us that dividends paid were what, how much? There is a note, I think note 4, note 5. There's a note which has told us something to do with dividends paid. Is there somebody who is able to see that note? Is there somebody who is able to see that note? Is there somebody who is able to see that note? There's a note talking about dividends that were paid. Dividends that were paid. There is a note talking about dividends paid. There's a note talking about dividends paid. So we are told here, dividends of 25 million were paid during the year. So dividends paid, no calculation at all, 25. But which examiner? Examiners will never give you dividends paid. Remember, you paid these dividends because of financing. You paid these dividends because of being financed by ordinary shareholders. How do we calculate dividends? If you remember, dividends are normally calculated by you tracking the retained earnings account. It's normally given by you tracking the retained earnings account. anytime you want to calculate dividends paid, go for the retained earnings account. So retained earnings account is a account. So come here, we have balance brought down. Yeah, because this money belongs to the owners of the business. It's not our money. We are liable. So balance brought down will come here. So retained earnings, how much do we have as retained earnings, ladies and gentlemen, here? If you look at this question very well, the retained earnings that we have, if you look at this question very well, if you look at retained earnings under equity, the retained earnings that we have, ladies and gentlemen, here what is happening now? Retained earnings. You can see retained earnings brought forward were 1210. Brought forward was 1210. 1210. And then we have in this case here balance carried down. Retained earnings, balance carried down. So balance carried down. What do we have here? Balance carried down. So the balance carried down here for retained earnings is 1098. Is 1098. Balance carried down is 1098. 1098. So the difference normally, the difference between these two, after I've brought in my P&L, you must come here and give us the profit and loss. First of all, give us the profit and loss, because the here and here, I've touched the two ends of the stick. I also need to now go the whole stick. All right. So we have here P&L, give us the profit after tax. Profit after tax. So profit after tax. So the profit after tax, we should be able to increase my retained earnings. My retained earnings, profit after tax. It's a loss, imagine, which is 45. It's a loss. So if it's a loss, this is eating my retained earnings. So I'll not credit, I will debit. So P&L, and why am I debiting? Because it's a loss, and I can see it is 45. And then there is something else that happened. There is something else that happened. Yeah, you can as well put it here and put minus 45, but I would rather take it the other side. I would rather take it the other side. So, ladies and gentlemen, what else do I have here? There is a note talking about the company revalued the carrying value of land and buildings by an increase of 70 million on 1st April 2022. On 31st March 2023, it transferred 3 million from some revaluation reserves to retained earnings. So retained earnings, we are receiving something from revaluation reserve. We're receiving, so this is going to increase. So we have here revaluation, we have here revaluation reserve of 3. Remember, our figures are in millions. So come and balance your account. Which side is bigger? Balance your account here. Which side is bigger? Which side is bigger? So this is 1213. This is smaller. So I think 1213 prevails. 1213 prevails. So meaning that the difference here means that you pay dividends. So dividends paid. So it will be 1213 minus 1098 minus 45. 1213 minus 1098 minus 45. So then how much should we pay as dividends? They're getting 70. They're getting 70. Is there something we have messed up? Is there anything that we have messed up here? They're getting 70. They're getting 70. 1213 minus 1098 minus 45. Is there anything we have missed? Just check again. Just check whether there's anything we have missed. Whether there's anything we have missed. Just check retained earnings. What is the balance brought down? What is the balance brought down? What is the balance brought down? I may be wrong. What is the balance brought down? What is the balance brought down? It should be able to agree. It should be able to agree, really. It cannot, in this case here, fail to agree. Yeah, I may have picked these retained earnings. Yeah, you can see this 1210 is total. It's supposed to be 1165. It's supposed to be 1165. This balance down here is supposed to be 1165. So 1165 plus 3. So I think now this dynamics changes. The dynamics changes here. The dynamics changes there. All right. So then this one here will be 1168. I don't know. Maybe this is bigger. 1168. 1168 minus 1095 minus 45. Minus 45. What shall we get there? Thank you very much for correcting me. 25. So this 25, we debit the retained earnings, credit bank, because we paid. So this automatically gives us what we call dividends paid. Dividends paid bank. I mean, this is the first time when I saw a whole examiner telling you dividends paid was 25. Nobody will ever tell you that. You will be required here to always track the retained account. You must track the retained account, retained earnings account, for you to be able to get the dividends paid. For you to get the dividends paid, you must track down this retained account. You must track down the retained account. So please allow me now straight away to go to the debt instruments. Let's go to the debt instruments that we have, and that will be the end of the question. So the debt instruments, we have got two debt instruments. We have the 12% loan note and we have the 8% variable notes. So please look at the debt. Now we're looking at the debt, and there are two of them. 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 So we have here the 12% loan note. So the 12% loan note, what happened with the 12% loan note? Let's check. What happened with the 12% loan note? Let's check. Let's check here. What happened with the 12% loan note? So 12% loan notes, we can see here. When we began, we had loan notes of 150, I mean, 150. This is 2022. But at the end of the 2023 closing year, they were zero. They were zero. So what do you think happened? Because there is no information. That at the beginning, we had loan notes of 150. Loan notes of 150. At the end of the year, no loan note. So it means we paid, isn't it? We paid. We paid, yeah. So in this case here, we shall come and talk of 12% loan note. So we have here 150, but now remember that there is the penalty. There is a penalty that was charged for early redemption, paid. There is a penalty that was charged for early redemption. There is a penalty that was charged for early redemption, for redeeming, for paying. There is a penalty, if you remember. You guys are the ones who told me about this penalty. You are the guys who told me about this penalty. If you remember, you told me penalty for early loan, redemption of 6. So we must add. So in short, we just never paid 150 alone. We paid 150 plus the penalty. So basically we paid 156 like that. And then we have the 8%. We have the 8% loan note. So the 8% loan note, are you able to track down the 8% loan note, great students of mine? Are you able to track the 8% loan note? It's very easy to track a loan instrument. It's very easy to track a loan instrument. It's very easy to track a loan instrument, really. You simply go to, because there is no note talking about them. There's no note talking about them. So you simply look for the loan item here, 8% loan note. So you can see at the beginning, we had 0. But at the end of the year, we had a loan note of 160. We had a loan note of 160. We had 0. So the 8% loan note, if I was to do a T account, 8% loan note, the 8% loan note, we had here balance brought down 0, and then here carried down 160. So then what does that mean, ladies and gentlemen? That we must have received this money. If I balance here with 160, 160, so we have here bank, 160. So we shall credit. So we issued new loan notes. That's why our loan notes are going up. So we have 8% loan note of 160, and this will be positive, and that is the end of this question. So you need to come and give us the sum. Please give us the sum there. Kindly give us the sum here. So this is the end of this question. So come and give us the sum here. So when you give us the sum here, then what we have at the end of the day? So we have here cash flow from financing. Cash flow from financing. So cash flow from financing, is there somebody who could be able to give us this figure very, very fast? Is there anybody who could give us this figure very, very fast? Anybody who could give us this figure very, very fast? Do we have anybody who can give us this figure very, very fast? So Kibisu tells me 100 what year? 39. Is that true? Is that true? Is that true that we have 139? So now remember that this 2 will be 320. 320 minus 25 minus 156. Right? Because this is 160 positive, because we issued there, minus 25 minus 156 plus 160 plus 160. So I'm being given a figure of 139. 139. So then what I will do, I will come and do now a summary. Now I'm doing a summary. So down there, you simply mention summary. Down there, you simply mention summary, 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 summary. So this summary of ours, you'll come and give us cash flow from operations. Cash flow from operations. Is there somebody who can remind us what the cash flow from operations was? Is there anybody who can remind us what cash flow from operations was? Anybody who can remind us what cash flow from operations was? Anybody who can remind us what cash flow from operations was? Minus 267. And then we have, in this case here, cash flow from investing. So cash flow from investing, what do we have? 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 Minus 145. Somebody is reminding me that this should be 145 negative. It's only one student who is giving me an answer. And yet I have over 50 students here. So cash flow from investing, yeah, negative 145. Negative 145. And then we have, in this case here, cash flow from financing. Cash flow from financing. At least this one I haven't yet forgotten. This one is very, very fresh in my mind. 139, 139. And therefore I should be able to get the total net cash flow for the year. The total net cash flow for the year. So you take this minus this plus this 139. Total net cash flow for the year. Total net cash flow for the year. I'm being given minus 273. 273. And then you come and finish this in style. You add cash and the cash equivalents and the cash equivalents brought forward. The 2022 one, if you remember, we done this working, brought forward 2022. So add cash and cash equivalents brought forward for 2022. Are you able to remember that figure? For 2022, remember. For 2022, remember. For 2022, remember. Not 2023, but 2022. For 2022, it's 195. It is 195. So please add this. You should be able to get, in this case here, a figure. And this figure should be able to agree to the cash and the cash equivalents, cash and cash equivalents, cash and cash equivalents carried forward for 2023, which in this case here will end up giving us a what figure? Negative 78. Is there somebody who is able to remember this figure? Is there somebody who is able to remember that we got that figure, that this thing has balanced? Is there somebody who is able? Can you kindly clap for yourselves, because you guys are great people. You must have learned quite a lot. Clap for yourselves here. Clap for yourselves. There is a place where you clap for yourselves in the Zoom. There's a place where you can clap for yourselves here. Yeah, great. At least I can see one ninja seeing the claps. Yes, thank you so much. So remember, in your exam, it's not about balancing. If you try to balance like now what Mwalimu has done, there will be one disadvantage. Actually, two of them. Two of them. Because if you put all these ticks, it means that you'll end up getting 40 over 14. Who would want to get? You know, the moment you understand this trick, then you will never ever go wrong. Never. Even when you are doing these things on your own, never go for perfection. All the students who have ever chased perfection in FR, they fail. Never go for balancing. Even the students who are doing BDA, never go for balancing. Always go for what we call low-hanging fruits. We harvest low-hanging what here? Marks. Low-hanging marks. Like, for example, the working capital changes, that one is straightforward. When I come, for example, the investing activities, I'll always be going for those things where I'm told, I acquired a plant of 60 million. Say plant acquired, bracket 60. I sold a house of 30. I sell a house, receive that money of 30, put it there. I'll not be looking for these depreciations and no. Not unless I get time, which you will rarely get in an exam. In FR, in BD, you will never get extra time. I'm telling you, for the number of years, as I told you, for the number of years that I've ever taught, the students in this case who end up passing this paper are those students I would call quote unquote stupid. Yeah. Those students in this case will go to some of these exams without lots of reasoning. Those students who know that they are in this exam to simply put in as many entries as possible within 37 minutes. Within 37 minutes. So when I come in my next class, which will be tomorrow, I don't know what time these guys are free. I would want to meet them tomorrow, maybe in the afternoon, or whatever time, so that I can now do the direct method, but that we can discuss on WhatsApp. Otherwise, thank you so much. It has been a lovely evening hosting you, and I believe you guys have gotten value for your time, and of course money. Thank you so much. Bye-bye. Thank you, David. Bye, Margaret. Thank you. Great. Thank you so much. Bye.